do you think this is normal I mean, I know COVID actually helped some of these stay-at-home plays, but is this normal to have valuations like this? Are you comfortable?
I'm not comfortable with the valuation, but I am increasingly comfortable with the themes that drive those valuations. And if you take a look at the market on a relative basis, if these companies aren't going to be the ones they first get to 1 trillion market cap and then to 2, I don't know what other companies would deserve to have that role. And so, yeah, I worry about the pop in these valuations, particularly as we've had an enormous move off the bottom of COVID. But on a relative basis, I think they're going to continue to outperform.
Well, they have better prospects than a lot of stocks that haven't performed like that. But I like the way you answered that, Ed. Did you like that? I'm not sure. I don't know whether you're that Paul is telling people to buy or to sell or to add or lighten up or
it's
what.
Hard to pin down, right? No, I'm with Paul. I think that's the right way to think about it. I mean, if you're going to pick one, I do think Amazon, despite trailing Apple and Microsoft a little bit on overall valuation, I think they're probably it's still fastest growing. It's incredibly fast growing company, which is interesting given how big it is. And it still has a growth story relative to Apple and Microsoft. So I actually think if we're going to pick a horse in this race, I'd go with Amazon first in terms of hitting that 2 trillion figure first. It's arbitrary, right? That 2 trillion, any of these numbers are ultimately arbitrary. We like whole numbers, we like big numbers, and so if we're gonna pick a finish line at 2 trillion, I think Amazon's the one. And I think it's still the most aggressive. I think too. I think Bezos, just in terms of how he thinks about the business, he thinks about it less as a tech business than it is just an opportunity business. Right? What can I buy next? Whether it's a Walmart or some other kind of back-end business that'll help it grow. So that's where, I don't know. I think, personally, I think I spent, I increased our Amazon spending 10, 12% just the past 3 months, right, under lockdown. So even after that, I'm sure it's going to continue to steam through.
So we talked about the ones headed for 2. There's some that we talk about every day headed for 1, like Facebook. Who's going to be one of the ones that are close to $1 trillion? Who's going to go over, Paul? You think Facebook's going over, or they got a lot of stuff on their plate right now, obviously.
Yeah, now there are 3 companies in that $600 billion to $700 billion range that are aspirants for the 1 trillion market cap. Facebook, as you mentioned, and actually 2 companies that I think might have a better shot at it, but they're Chinese companies, so we don't think about them probably enough. That would be Tencent and Alibaba. All 3 of them have about the same market cap, and frankly, I like the growth prospects better for the 2 Chinese companies than I do for Facebook, particularly with the cloud over the head of Facebook now with the boycott on the digital ad spending.
The NASDAQ and these stocks just have a way of garnering a lot of excitement and attention. We've seen it before, and it wasn't similar to 1999, but I can tell you we have a beautiful headquarters out at CNBC, and we built it when the NASDAQ hit 5,000. And for a long time, when the NASDAQ was not at 5,000, we called it the NASDAQ 5,000 building. Now we've left that behind. We're so far beyond that. We've doubled it, and we're heading higher and higher every day. Is this where speculation and froth resides, Paul? Should we look at it that way or not? Or Ed, either one of you think that? I mean, this is where it's going to be if it's somewhere, isn't it? When people get excited and stories and everything else?
Well, of course, it's a self-fulfilling prophecy because we give undue attention to these stocks. And, of course, all the indices that we follow carefully are market cap weighted. So if you take something like the XLK, which is the technology spider, probably the best-known tech ETF, between Microsoft and Apple today, you're talking well over 20% in those 2 stocks, even though the index has about 70 names in it. And so, unfortunately, it builds upon itself.